Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
Hello and welcome to Mortgage Mom Radio. I am Debbie Marcoux and I am the Mortgage Mom. And today we are going to be talking all about what the best way to take cash out of your home is. And so the last few shows that I've done, I'd say the last 2 or 3 shows have really been pointed at home buyers, buying a home, first-time buyers. And so today we're going to turn the tables a little bit and we're going to talk to you homeowners about what's the best way to take cash out of your home. Many people, I got to tell you, the other day I was scrolling through TikTok for a good amount of time, and I'm scrolling through Instagram and Facebook and all the goodies. I was just bored on a Saturday, right? Spending hours just kind of scrolling like we all do. And ad after ad after ad was coming up about taking out a home equity line of credit. So I do want to talk about those today. I want to make sure that you guys do understand what they are, how they work, and what happens when property values do start to come down, because it's not particularly what you might think. So we are going to get into that today. What is the very best way to take cash out of your home? The Mortgage Mom is going to tell you all about it. I am Debbie Marcoux. I am the Mortgage Mom, and every single week I am bringing you hot information and topics about what is going on in the economy, what is happening in the real estate and mortgage world, and I'm bringing you all the education and information that I can. I do want to remind everybody that this show is interactive, so I would absolutely love it if you would put your questions into the feed. I will read those out loud and I will answer them for you. This show is interactive for a reason. It helps everybody to get the answers that they're looking for. It helps if you're thinking about a question, there is a very good chance that there are many others out there that have the same question. So by you being strong and bold and not scared to go ahead and ask the question, you are only helping all of those people that are listening. This show is on Facebook, YouTube, Twitch. It goes to radio over the weekend. It's a podcast. So think about the thousands and hundreds of thousands of people that are listening to this show. And so we do want to make sure that we're giving everybody the information that they need for success in their finances and their future. So really quick, I'm going to jump in with the highs. I've got Sunshine and Garden. She gets on. She says, hi, Debbie. Heather jumps on. She says, hi, everyone. Mary jumps on. This is my mom. She says, hi. And what I can actually see that you guys can't is the majority of people are actually watching this show from YouTube. But like I mentioned before, we're actually streaming via Facebook and we're also streaming via Twitch. So whatever your favorite platform is, you can actually watch us. Do you want to know when we go live? Do you want to be part of the show? Do you want to get interactive and be able to ask those questions? And you're listening by radio on Saturday or Sunday? Well, the best way to know is to get a text message once a week. Sometimes I go on Monday. Sometimes it's on Wednesday. More often than not, I'm on Wednesday. But for example, this week I actually have something personal going on. And so I'm doing this show on Monday instead of Wednesday. So to know when we go live, not miss a show, be able to jump on, ask your questions, you've got to text the word mom to 844-935-3634. That's 844 we lend for you. That's WELEND and the number 4. Text the word mom to that number and you will get one link, once a week. And I promise I will not spam you beyond that. We do have a home buyer workshop that is coming up. And so I do want to make sure you guys are all ready for that. If you've been thinking about buying a home, you have no idea where to get started, you've never done it before, or maybe you have done it, but it's been a very long time since you did. Well, get your refresher course or get your new course for free. We're doing it on Sunday, the 25th at 1 p.m. Pacific time. We're going to do it on YouTube. It might possibly stream on Facebook and Twitch. We're still working out the kinks with the links, but definitely on YouTube. And the best way to know that we have started, that we are on and moving, is to make sure that you're part of the texting app. So again, text the word MOM to 844-935-3634. If you don't want a text message once a week, but you do want to know when I go live for that workshop, instead of texting MOM, you can text RSVP. So both will get you the link on the day of, but if you don't want the weekly show reminders, then only text RSVP. Okay, so with that, we are going to talk about today's show, which was what is the very best way to get cash out of your home. We're going to be talking about equity lines, loans, and I do want to one more time say that Heidi jumps on, she says hi all, and Ronnie jumps on and she says hello. And Ronnie, thank you so much for jumping on and joining us. Again, remember that this is an interactive show, and anybody and everybody that is watching or listening during the broadcast, please reach out, ask your questions, put them in the feed. So with that, we are going to take a super quick break. And when we get back, we're going to get started. What's the best way to pull cash out of my home right now today? Hold tight. We'll be right back.
She's a mortgage mom. She can get things done. When you're in need and don't know where to go, pick up the phone and call Mom.
Welcome to the Mortgage Mom Radio Home Buyer Workshop. I am Debbie Marcoux. I am the Mortgage Mom, and I want to remind you guys that this is interactive. So please put your questions and comments into the feed. I would love to be able to read those out loud and answer them for you. We are going to make our way through our PowerPoint deck. I'm going to take you from the beginning of the process all the way through the end. What do certain things mean? What are certain words that you guys should know? And all the way to how do you pick a real estate agent and what do you do when you're about ready to close the loan? So don't go anywhere. We're going to be getting this started right now. I want to make sure that you guys are all ready. We do have games if you guys do want to be interactive with us, where you can win some Mortgage Mom Radio t-shirts. We've got some Starbucks gift cards, and we've even got a free appraisal. So make sure you guys are playing those games with us and you have your phones available to do that and be part of the show.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
Okay, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux, and thank you guys for watching that commercial break. It gives me just a second to grab some water and rearrange so that I'm comfortable on the sofa, and then get back to all of you with the topic of the day. So while we were at commercial break, I could see that Kim jumped on. So Kim, thank you so much for joining. Hope that you enjoy the show, and if you have any questions, please put them into the feed. Happy to answer those for you. So today's topic is, what is the very best way to pull cash out of your home? And I started the show off by mentioning that I, had kind of a lazy Saturday. We had some rain, which is unusual for us. It was very nice. It was just kind of a nice day to kind of relax. And I spent a lot of time scrolling, which I don't usually get the time to do. And I was scrolling through TikTok, and I'm scrolling through Facebook, and I'm scrolling through Instagram, and I'm just keeping myself busy, and I'm on YouTube, and I'm watching shows. And over and over and over again, there were advertisements about getting a home equity line of credit. And although home equity lines of credit are fantastic, and we'll talk about all the goods about them, there are some things that you need to be aware of. So depending on your circumstances, a home equity line of credit to take the cash out of your home might not be the direction that you want to go. So what is great about a home equity line of credit? Well, number one, if you've got an interest rate right now on your first mortgage that is super low and you don't want to touch it, you don't want to disturb that rate, that monthly payment, or that balance, a home equity line of credit could be a great option. You're going to get an additional line of credit that you can borrow against and pay back, and borrow against and pay back. And it's going to be at, a higher interest rate than what you would have on a first mortgage, but it's not disrupting the entire balance that you have on your mortgage today. So for example, if you have a mortgage of 400, 500, 600,000, and these are just an example, and you have an interest rate that's around 3%, 3.5%, and you were to try to pull out 100,000, let's say, that line of credit, although it would be at a higher interest rate than what you have on your first mortgage, the majority of your balance, the majority of the money that you owe would actually still remain at that lower rate. So you're only going to pay that higher interest rate on that line of credit, on that dollar amount. So this holds true, same exact explanation if you were to do a home equity loan instead of a home equity line of credit. So what is the difference between the two? So a home equity line of credit is very similar to a credit card. So think you have a credit line and you only make a payment based on the balance that you owe. You can pay it back and use it again, and pay it back and use it again, which is great. Home equity loan, you're going to take all of the money. It's just like your mortgage. It gets funded at the day of funding, and you owe this balance until you pay it back. It is a fixed rate, a fixed monthly payment, and it is paid off when it is paid off. There's no ability to go in and reuse it. So those are the basic differences between an equity line of credit or an equity loan. So these are two ways that you could pull cash out of your home if you wanted to today. Now, one thing that I have recently been receiving quite a few questions and quite a few phone calls about are people that are looking to take lines of credit out because they're thinking that in the future that they might want to do something with that money. So we want to get our line of credit today, but we don't want to get a loan. We don't want to refinance because we're not sure, when we're going to use the money. We don't want to pay a mortgage payment, or we don't want to pay a payment or owe interest on money that we don't use. But they're thinking about taking money out to buy another property, or taking money out to pay off maybe some debt, or they're taking a line of credit to possibly do home improvement to the property. So whatever that reason might be, you need to buy out a co-owner on the home. So, a lot of people are calling me and saying, well, I think that I'm going to want to access this money in the future. So I'm thinking about actually taking that line of credit now, but I don't want to draw anything and I don't want to make any payments until I'm ready to use it. So one thing that I do want to make sure that you guys are aware of, and because I have been in this business for a very long time, and anybody that is watching this program who's been in the business for as long as I have, or at least at a minimum, has been in the business, I would say, since at least '05. Okay, so we've got 18 years is going to be 17 years in the business is going to be the minimum of somebody who can actually talk to this situation. But when we see property values decline, so we've got, you've got me, the mortgage mom, who's saying, I think prices are going to hold. I think values are going to stay, roughly the same. I think appreciation is going to slow down. I think we might see property values slip, maybe as much as negative 10%. I think that we might see over the long haul of, this recession that we're in at the moment, whatever name or term that they're calling it today. But I do think that we're going to see a little bit of slipping. I don't necessarily think that we're going to see some ginormous crash, and that is my favorite word, ginormous. But I don't think that we're going to see some crazy crash. That's at least my opinion. But you have many people out there that are talking crash. And so, I've got clients calling saying, well, I want to get out the cash now because I'm concerned about where property value will be later. I don't think that I'm going to be able to take out money later if my property does go down in value. And so I do want to talk to those people first, because the one thing to keep in mind with a line of credit is that if you owe money on a line of credit and your property value drops, it declines. And we saw this happen in 2007 and 2008, all the way up to 2010 and even 11. So I have a lot of people go, well, she doesn't even know what the day, when we had the big recession last time. Okay, guys, it doesn't just happen. It's not like, boom, on this date we went into recession. It starts and it hits pockets and it moves across the nation, and it hits you when it hits you. And then it takes time to recover, and it doesn't just go down overnight and stop. It's just not like a flip flop. It's on and it's off. It takes its time to get there. And it was really a very drawn out period of time that really started in 2007, but it really was bad in 2008 and 9. Some people got hit hard in 2010, even as late into 2011. So you do have to think about, I can't give you an actual date, that we had a recession the last time. But during that recession, when we had crazy fallout of property values, what happened to lines of credit? What did I see? So what I saw was, if you had a balance on your line of credit, they cut it off. You are no longer allowed to access, even if you had remaining limit that was open. So think about your credit card. You've got a balance. You use some of it. You've got a limit. You can continue to use it till you hit the limit. A lot of times on a line of credit, we all work that way. We use a little bit. Maybe we don't use it all, but we've got a little bit always remaining. It's our nest egg. We saw them actually shut those down. They shut them down. They didn't allow you to access them. And they took the balance that you owed and they moved it from an interest-only payment to a principal and interest payment. And it was due over a particular term. And I saw that term anywhere from 10 years to 30 years. So it depends on the bank that gives you the line of credit. Depends on what's in the fine details and what they're telling you is going to happen after your line of credit hits its term. So most lines of credit have a 10-year draw period. And after that 10 years, then it turns into some sort of principal and interest payment to get you paid off. And those are terms that are stipulated in the paperwork when you take that line of credit. We actually saw clients that had a line of credit for a year and had lots and lots of room on that line of credit, and they shut it down. They turned it off. It was no longer accessible. And if they had a payment or they had a balance on that line of credit, that payment became due, and the payment was changed to be one that would get that balance paid in full. So for anybody that is out there that is thinking, I'm going to set this up for later because I'm concerned that property values might drop, but I don't want to pay on it because I'm not going to use it today. Think again. You guys might want to consider actually getting the cash out of the house now. So if you have an equity loan or you do a full refinance, you would actually take the entire amount out of the home right now, which means that there is nothing that they can shut off or cut off or not let you access. You've already taken that money. It's something that they can't get back. So with that, we had Sunshine and Gardens got on. She asked the question. She says, do you have to use all the money on the line of credit at one time, or can you use it, pay it off, and use it again? So that's a great question, and that's exactly what I was just talking about. Most people that get a line of credit want access. They want a line of credit. They want a limit. They want a line of credit limit, a credit limit, and they will use it and pay it back and use it and pay it back, or not use it at all because they're holding on to it for future use and they don't want to pay interest on money that they don't need. So yes, with a line of credit, you can actually take the funds, you can pay it back, use it, pay it back, use it, pay it back. Most line of credits, like I mentioned, most lines of credit have a 10-year draw period. So what that means is that you can use that line of credit and pay it back and use it and pay it back and use it and pay it back and have that interest-only monthly payment for that first 10 years of that line of credit. After the draw period, based on the bank and based on the terms that you agree to, it will then turn into a fixed rate loan to get that balance paid back, whatever that remaining balance is at the end of your draw period, over 10, 20, 30-year term. So it does depend on the paperwork that you sign. But again, I want you guys to be very careful in understanding a line of credit is an adjustable rate. So as the Fed changes the interest rates, the lines of credit are tied to them. They will move. Your monthly payment will move. If your property value drops, they will shut your line off. So very important things to keep in mind and to remember as you're saying, I want to pull cash out of my home, but I'm thinking maybe I should do it this way because I'm not quite ready to use it yet. Maybe you want to think again about some additional options. How might you want to consider taking the cash out? And this is if you believe that property values are going to drop. So everybody has a different opinion right now. And right now it's all opinions. Nobody can say exactly what's going to happen. Nobody has a crystal ball to say that property values are going to fall through the floor. Nobody has a crystal ball to say that property values are going to remain the same and stable. Nobody has a crystal ball to say that they're just basically going to stop appreciating or that they might appreciate more. So this episode is for you, the person who believes that we're going to see property values come down. I want you guys to hear what your options are to get cash out and when might you want to do that. So we're going to take a quick break. I can see that Heidi jumped on. She had a question. I can see Sunshine's got another question for me as well. If you guys have questions for me, please put those questions into the feed. I am reading them out loud and I am answering them for you. That is what we do. This is an interactive show. If you want to call my office, if you want to talk to us, it is 844-935-3634. That is 844 We Lend for You. It is WELEND and the number 4. If you want to get interactive with us, but you're listening by radio on Saturday or Sunday, or if you're listening by my podcast and you want to know how do I get interactive? How do I ask these questions during the show? Text the word mom to the same exact phone number you'd call my office. It's 844-935-3634. That's 844 We Lend for You. It's WELEND and the number 4. Text mom to get a link once a week to join us on YouTube and ask all of your questions. But in the meantime, we're going to take a super quick break and we'll be right back. Heather doesn't know when to interrupt me, so she's typing some things in there, and I do want to remind you of that. That's actually a great point, Heather. Thank you so much. Is if you guys have any questions, this is interactive. That's why we have the feed going. That's why your questions are coming through. That's why I can see them. I want you to ask your questions as we move through the presentation. It's very important. All right, so Sunshine and Gardens jumps on. If insurance goes into escrow for the year, is that money part of the closing costs? And that is a great question. And yes, it is. So the way that it works when you are closing your loan is that we require as a lender, not me, I work for a lender that's doing your loan. It is my job as a loan officer or an LO to make sure that you are comfortable and that you understand the transaction. A lender is going to require that you pay 1 full year upfront of your homeowner's insurance policy. Then on top of that, we are going to collect a couple of more months, probably 2, to put into your escrow account. And then every time you make a payment throughout the year, a little bit will go into escrow, a little bit will go into escrow, a little bit will go into escrow. And when that insurance is due at the end of that year for now a new 1-year cycle, the lender or the mortgage company will make that payment on your behalf. So in short, the answer is yes. You're going to buy that 1-year policy up front at closing, and that is part of your closing costs.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
All right, so welcome back to Mortgage Mom Radio. I am Debbie Marcoux, and I am the Mortgage Mom. And today we are talking all about pulling money out of your home and what is the best way to do that today. I'm really talking to all of those people out there that are thinking that property values are going to come down a bit. And if that is your school of thought, then we need to talk about what are the best ways to get cash out of your home and when is the best time to do that. So right before the break, I did have a question come up from Heidi, which was a great question. Says, so then what is the difference with the home equity loan? So before the break, we were talking equity lines of credit and what you need to be aware of and what you need to be concerned with if you are of the school of thought that property values are going down, they are going to decrease, we are going to have a major fallout of the market. If that is truly what you believe is going to happen, then a home equity line of credit is probably not for you. So if you didn't hear that segment, you're jumping on, it's radio, you just got in the car, you turned on your station, and here I am. Go ahead and go on over to my YouTube channel or check out my podcast. Mortgage Mom Radio is everywhere, whether it's YouTube, Facebook, podcast. You guys can find us on just about every channel, and you can actually rewind and listen to the beginning of the show. But back to Heidi's question, which is a great question, is what is the difference between using a home equity line or a home equity loan? And between the two, my preference would be a home equity loan. So if I am in the school of thought that, property values are declining and that they are going to continue to decline, and my home, this time next year may not be worth the same amount as it is today, then I would actually be looking at either doing a full refinance or a home equity loan. So a home equity loan is just like a first mortgage in the way of a fixed interest rate, a fixed monthly payment, a fixed term for the loan. However, it is going to be at a higher interest rate than a first mortgage would be. At the time that you close the loan, at the time of funding, the loan will be completely funded and given the proceeds to you. So if you are looking for $100,000 or $150,000 or $50,000, whatever that number is that you're looking for, you will actually get those full proceeds up front. You now owe that money and you now have a repayment, monthly payment to get that loan paid off over whatever those years are that you choose and you select when putting that loan together. I like this idea because it's not like a line of credit where if property values do drop, that they can come back in later and say, oh, well, your property's not worth what it used to be. And so we're going to actually reduce the amount that we're willing to lend to you. You've already taken the money. It's already in your bank account. It's already accounted for. And that is not something that they can do. Once you take the funds, they're yours. So I do like the home equity loan better than a line of credit for that particular reason. Again, if you believe that property values are dropping. So that is what the show is all about today is, if property values are dropping, that's what I believe is going to happen. Then how do I make the most out of this? I need to get some money out of my house. I've got repairs, I've got improvements, I have debts, I've got student loans, I have a kid going off to college that I'm going to need to pay for that I was, initially thinking, oh, well, when the time comes, I'll just refinance and interest rates are so great and get the cash out that I need to pay for tuition. So lots of people have different reasons why they're trying to take cash out of their property. And for that reason, that is why we're having this show today. So I do like the home equity loan better than the home equity line. That is my personal preference. But what are some of the other ways that you can get cash? So going back to questions that I have here, Heidi, I hope that I answered the question, but if I missed something that you were looking for, please go ahead and put that in the feed for me and I will read that one again. So Sunshine got on. She says, if you get a line of credit, what happens when you go to sell the house? Does it affect the sale? The money you took out, does it become due? So a line of credit, a home equity loan, or a mortgage are all liens against your property. So when you go to sell your home, any lien that is against your property has to be taken care of. It has to be paid off if there's a balance. If there isn't a balance, that's okay, but it still has to be closed and removed so that loan is no longer there. So if you have a balance on the home equity line of credit, there will be a payoff demand ordered, the same as it would be on your first mortgage. And all of that does have to be paid at the time that you sell the house. So it doesn't matter if it's a line of credit. It doesn't matter if it's a home equity loan. It doesn't matter if it's a mortgage. Either way, if it is a line that is tied to the property, then when you go to sell, they are going to order demands on all of those loans, and you are going to have to pay off whatever that balance is that you owe. So great question. Thank you so much. Heather asks me, if I have a home equity line of credit and they close it because the property values go down, if the property values go up, will they open my line again, or do I have to get a new one? So that's a great question as well. All I can do is go off of what I saw and what I witnessed and we watched during, the last recession that we had, where the property values did plummet tremendously. And once the line of credit was shut off, as far as the draw, you being able to draw, we did never ever see them reopen those up for people. Now, I cannot say that never happened. I cannot say that there is nobody inside the United States of America that somehow got their draw period reopened or their line of credit reopened and basically allowed to reuse it and re-extended the credit to them. That absolutely could have happened, but not in any of the lines or loans or clients that I've worked with during those years, during that time, did I ever see that happen. So my answer to you would be no. I don't believe that they will reopen it for you if property values go back up. Remember that real estate is cyclical, you guys, and we talk about this quite often, but when real estate, it goes up and it comes down, and it goes up and it comes down. And so that cycle is usually a 7 to 10 year cycle that you will see. This last cycle that we had was actually really long. It definitely exceeded 10 years. But the cycles are long. So as we start to see property values come down, although they might not crash, a huge major crash, which I don't believe, but many of you do. And so that is why I do this show. I'm showing you all of the ups and downs to what you guys should be thinking about when you're trying to make decisions that are best for you and your family. So, in these long, cycles, property values might come down just a little bit and hold steady. They may not appreciate, they may not depreciate, they may drop a lot and then come right back up again. But those cycles do take time, and those draw periods are usually 10 years when you sign those original docs. And so if you think about a cycle taking, 7 to 10 years, there's typically not enough time in that cycle for it to hit the floor. Banks start to feel comfortable again. Banks start to say, okay, cool, we're going to do lines of credit again. And oh boy, let's open that up. They're not going to reopen it, if you don't have a lot of time left on that draw period. So usually you would have to apply again to get a brand new line of credit redrawn and rewritten with new terms. So that would be my answer to that. Again, I'm not saying that it could never happen. It absolutely could. But I personally never saw that happen in all of the time that I've been doing this. And I have been doing this since 94. So I got a good amount of years going there. Okay, so next question. Same thing. Heather said, and can I pay off the first one with the second one? So yes, if you wanted to apply for a new line of credit because your line of credit was reduced, and then all of a sudden property values go back up again, economy's flourishing, banks come back out and say, awesome, we're gonna offer lines of credit again, because they'll usually stop even writing new lines of credit at the point that they get there where property values have dropped so much that they start getting really shaky knees over whether, all these lines of credit that they have outstanding that they've given to people, that now if those people use those lines of credit, their homes are going to be over encumbered. When their knees start to shake like that, not only are they shutting down people that already have lines of credit that have been established and opened, but they're also not offering new lines of credit. So at a point where they would start to offer new lines of credit again, then yes, you would be able to open a new line of credit, which would in turn, if you still had a balance on the old line of credit, you would be paying that off. Now, if somebody has a line of credit today and they're, coming up close to their 10-year draw mark. Like, guys, if you got, 8 or 9, you're at year 8, you've only got 2 or 3 years left of your draw period, you may want to start thinking about refinancing the current line of credit that you have, because you are going to turn in to a principal and interest payment in order to get that balance paid off, and your draw is going to go away. So if you're in a line of credit right now where you're starting to approach the latter term of that 10-year draw period, you might want to actually start thinking about refinancing that balance that you have into something a little bit more affordable. So great question, Heather. And then Heather says, yes, I think that was great. So thank you, Heidi. I'm so happy that I answered the question for you. Again, I want to remind everybody that this is an interactive show. I want to answer questions for you. If you are brave enough to ask the questions, that means that there's many, many people that have the same question, that have been wondering the same. So please put your questions into the feed. I would love to read those and read them out loud to you. If you guys are enjoying this show so far, please give me a thumbs up. That really does help the algorithm here on YouTube and Facebook, as well as Twitch. One of these days, I'm going to get a Twitch follower. I swear. We keep doing it, and one day it's going to happen. I'm going to do a loan for somebody that is a gamer that likes to use that platform. So I'm going to keep doing it till it happens. But I am Debbie Marcoux. I'm the Mortgage Mom, and today we are talking all about the best way to pull cash out of your home. Have you been looking for cash, thinking about cash? Everywhere I turn, every marketing ploy that there is talking lines and loans, home equity lines and loans. And why are they talking about it that way? Well, because a lot of people are very hesitant to refinance their home right now. They're afraid to get rid of that low interest rate that they have on their current mortgage, and they don't want to start over at a higher interest rate. So they're trying to find other ways, other outlets to get the cash out of their property. And so what's the easiest way to go after the consumer? Well, you got to play to where you feel that the best market is at, which would be people saying, I don't want to get rid of my mortgage. I've got a great interest rate on my loan today. And so I'm just going to take a line of credit, or I'm just going to take a loan. So that is what we're talking about today. It's very important for you guys to understand what can happen in the future with a home equity line of credit. That is not something that you are seeing people talk about. And that's because there are a lot of people that are in this industry that weren't around before. They didn't see what took place. They didn't see what happens when the market, when the real estate market does come down, when property values do fall. So we're going to continue to talk about this today. We are going to take another quick break. I'm just a little bit thirsty, but if you have questions, put them into the feed. I'm going to keep answering them for you. Please also text the word MOM to 844-935-3634. That's 844 We Lend for You. That's WELEND and the number 4. If you want to know when we go live, you want to be interactive, and you're listening by radio or podcast, that is the best way to know. I'm going to send you one text message, a link a week, and all you got to do is click on that link and join in. So with that, we're going to take a super quick break, and we'll be right back.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call Mom.
Here we go. Home buyer education. You guys are looking at the very first screen that is in my PowerPoint presented by Mortgage Mom Radio. You've got my name, you've got my licensing. That's all very important, because it is important to know that the person that you are working with is a licensed agent or a licensed loan officer in your area where you're looking. That is very, very important. I do recommend that you have somebody with state licensing for your state. So for example, I personally have 13 state licenses. I'm working on 3 more, so I should have about 16 state licenses by the end of this year. And many loan officers will only have 1 license for the state in which they work and they live. So you do want to make sure that you are working with somebody who is licensed in your state. It is very important. Every state is a little bit different. The rules, everything that goes along with the financing can be slightly different from county to state to city. So that is very important. Now, the cool thing about Mortgage Mom Radio, since we are licensed, or I am licensed in so many states, we can actually work with you not no matter what, but for a good amount of the nation, a good amount of the country, we can work with you. So we have many clients who have called us and said, try to figure out where I want to go. I might want to be in Texas. I might want to be in Florida. we can help him in both of those journeys. Tennessee, Georgia. If you guys want to have a list of every state that we can help you in, please feel free to reach out. I'd be more than happy to give that to you.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
All right. So welcome back to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom. And every week I am talking about new information, topics, headlines, anything that I see is going on in the world and it would relate to real estate or mortgage. We're hoping to bring you the education that you need to help you and your family make the best decisions for your future endeavors. So today we're talking what is the very best way to take cash out of your house. And of course, we've really been stuck for a majority of this hour on equity lines and equity loans. And that's because that is the easiest way to get the consumer to pick up the phone and give you a call. Everybody's thinking, I want to take money out of my home. I don't want to disrupt the interest rate that I have. I don't want to change the mortgage that I've got on my home right now today, but I really do need to get this cash. And what's the best way to do it? Remember that the marketing and the commercials and the ads are going to be playing towards, what is hot, what is popular, what is going to make the phone ring. That's the most important piece, right? And although home equity lines of credit are great for some, and they're not my favorite. I'm going to be totally honest with you. They are really good for somebody that has the money to use it and pay it back, use it and pay it back, use it and pay it back. And if it gets closed because property values fall and they shut your line of credit down, which could very well happen, it's not going to hurt you in any way. You're not relying on that interest-only monthly payment to be able to afford that line of credit that you signed up for. Because if they do shut it down and you've got a balance that you owe, trust me, that interest-only payment's going to go out the door as well. And you are now going to be into a fixed-rate term with a principal and interest payment to get that balance paid off. So, when property values do come down, the investors, the banks that are offering these lines of credit, this money, their knees start to shake, and you'll see loan programs will start to go out the door. One thing that I can tell you that I've seen recently is, for example, we used to have a investment property loan. The property would actually carry itself. We do still have that loan, but we used to be able to do it to an 85% loan to value. We are now down to 75% loan to value. Why are we at 75? Why did the market change? Why did our investors, the people that are offering these loan programs, decide that they wanted more money down from the person that was going to utilize this to get the financing? Because they are unsure of the future, right? Everybody is talking property values are going to drop. Then you've got this side over here that says, we don't think property values are going to drop that much, right? I think we're going to slow down. Absolutely. I think now is still a great time to buy. Absolutely. I think we might actually see property values, go into the negative 5 or 10% in equity from where they were top of the market. I could definitely see that happening. But we've got a side over here that's talking about how we're going to see some massive decreases, and we're going to see a big giant crash. And so when you're making these decisions about how you want to take this cash out of your home, you need to be looking at all options and say, which one is best for me? Do I go the safe route? Do I play? Am I a gambler? Do I go to Vegas? When I win, do I let it ride, or do I take my money and walk? And everybody is different. So there isn't one answer that's right. There isn't one answer that is the way that you should go. There isn't one thing that I can tell you is absolutely the best way to do it, right? We've got all the programs. We've got all the products. You want a line of credit? We're going to help you. You want a home equity loan? We'll help you. You want to do a cash out refinance? We'll help you. We've got it all. It's just a matter of which one makes most sense for you and for your family. So we had a question come in. This was from eBay is the way to freedom. I love that screen name. Can I get a home equity loan with a low credit score? Home equity loans, yes. Home equity lines of credit typically want you to have a higher credit score. But home equity loans, yes, you can. It depends. They will limit how high that they will take you into your loan to value. So what is loan to value, right? And I don't want to talk acronyms and then people don't understand what I'm talking about. So if your home is worth $100,000, to make life simple, an 80% loan to value would be an $80,000 loan. So you have 20% equity in your property. A 70% loan to value would be a $70,000 loan, and you have $30,000 of equity in your property. Again, this is assuming that this is a home that is worth $100,000, okay? And I'm only using that number not because that's easy to find anywhere in the United States, but it is an easy number for me to round off while I'm sitting here in the studio. So your loan to value is what determines how much cash that you can get out on a refinance or a home equity loan or line. There are going to be guidelines that have to be adhered to, and based on your credit score, the loan to value that is allowed on a home equity loan will be higher if the higher that your credit score is. So they may be willing to go to 90% loan to value, or even maybe 95% loan to value, depending on where your credit score is. If you've got a low credit score, they're not going to allow that. So what does that mean in a loan, a home equity loan? And this would work the same for an equity line. It's just education and information for you. So how do they determine how much money that you get out? So let's say that you've got a mortgage balance of $50,000 and your house is worth $100,000. And they say, we'll let you go to 80% loan to value. That means that $80,000 is the maximum combined loans that you can have against the property. So if you owe $50,000, you cannot take out more than $30,000 in cash. So if you can go to 90% and you can go to $90,000, you'd be able to get $40,000 out. If you can go to 95%, you'd be able to get $45,000 out, and so on. But you do have to make sure that you are taking into consideration what you owe on your first and what that balance is, and then that does have to be subtracted from what would be available. So if you find a bank that says, we'll allow 90% or 80% or 95%, whatever that number is, then you do have to make sure that you subtract what you owe on your first mortgage to see what would really be available for you to take in cash out. But to answer that question, eBay, yes, you can get a home equity loan with a lower credit score. An equity line of credit, it's going to be a little bit more difficult to get those written for you if you've got a lower credit score. The only way to know what the options are and the opportunities available if you are concerned about credit score is to just call us. Let us talk to you. Let us figure out what your credit score is and let us determine what those options might be to help you to get the cash that you are looking for. So just like you guys would text the word mom to our phone number to get your link once a week, it is the same exact phone number to give our office a call to talk to us about your options. It's 844-935-3634. That's 844 We Lend for You. That's WELEND and the number 4. Just call our office and talk to somebody. We've got a call service that answers after hours. They will book an appointment for you. You can call Saturday and Sunday. We've got people answering the phones. If they don't answer, it goes to call service. They'll book an appointment for you, and you can get an appointment on a Saturday and you can get an appointment on a Sunday. If you need an appointment that is not showing as available, send me an email. You can go to the website, mortgagemomradio.com. So mortgagemomradio.com, and you can click the contact us. It will send me an email, and I would be more than happy to get you scheduled for a call at a time that works for you. So if you work off hours and you need an evening or an early morning, we've definitely got girls all over the country and men that can help you when it's convenient for you. So you just got to reach out, send me a message. I'll make sure we get you hooked up. But that would be the best way to know how much that you can get if you're concerned about your credit score. So Heidi did ask another question. She says, so I have noticed some of the homes around me have been selling for a little less than previously, and I've been thinking about taking some money out of my home to buy an investment property. So Heidi, that is great. She says, what would you recommend I do? I have an amazing rate on my home today. And that is a lot of what we're talking about here in this show today. Is we have a lot of people who are in that position and they're thinking, I want to get myself set up and ready to be able to execute to purchase that next investment property. I do want to access the equity that's in my home to get the cash out that I need to make that happen. How do I do it? And they're seeing advertising all over the place and brainwashing. I mean, I'm telling you, I spent Saturday streaming and sliding and clicking, and oh my goodness, it was everywhere. There's ways to get it out. Equity lines of credit are an option if you feel it's something that you are going to execute very shortly, very quickly. And remember that an equity line of credit is an adjustable rate. So you better have a plan to get the line of credit paid off if interest rates continue to go up, which seems to be the characteristic that we're seeing. So again, I would really, really honestly suggest looking at both a home equity loan and a full refinance. And so why those two? Because you're getting your cash out. It is in your bank. Nobody can take it back. It is a fixed rate. You are not going to sign up for it unless it is something that is within your budget, that you can afford, that you can be pre-approved for. So it's not like taking money out of your home and then your property goes upside down, that now all of a sudden you can't afford the payment and you're going to walk away from your home. That is absolutely not the case, because we are qualifying you for the fixed rate payment, for the loan term that you're setting up, and that is going to remain and stay the same, whether it is a home equity loan or whether it is an actual full-blown refinance. So what would make me determine or tell you which one is better for you, which option should you take? At the end of the day, we're going to look at the overall picture. That's the bottom line. We're going to look at the math. The math doesn't lie. The math tells us where you are in a better place based on the numbers. And so we're just going to run those calculators. And I know you guys have heard me talk about it before, but we're going to look at your blended rate. So what would your interest rate be if we did a refinance today and we pulled the cash out of your home today? I understand that your monthly payment will go up from what you're paying right now if you do have a significantly low interest rate on your mortgage, but we are talking about getting cash out. And when you get cash out, you are going to have to make some changes. So we're going to look at what would a new loan cost you? What would the rate be? How much will you pay in interest? And then we're going to look at, what do you pay today? How much do you owe on that loan? What is your current interest rate? How much cash are you looking to take out? What would that interest rate be on that new loan? And then we are going to figure out your blended rate. So if you have a home that you owe $200,000 and you're thinking that you want to take $200,000 out, and this is very common. A lot of people have a lot of equity right now, or maybe you owe $200,000, you want to take $100,000 out, right? It's still, that is still 50% of what you owe on your first mortgage right now today, or it could be similar or the same. Okay, so in that situation, even if you're changing the interest rate on your first mortgage, you are actually going to pay less by doing a full, complete refinance to a lower interest rate and a lower monthly payment than what you would see on an equity loan. Home equity loans will have higher interest rates. They are fixed rate second mortgage liens, okay? Guys, a fixed rate second mortgage lien is not cheap. When a client or a lender, so I'm not even going to say client, when a lender, a bank, whoever is giving you the money, the investor, is in second position or second lien position against the title of your home, they have less opportunity to get their money back in case of default. So if you stop making payments, if you were to foreclose, if you were to lose your home, they get paid after the first lien gets paid. So if property values drop and you lose your house and the bank sells it, they have to pay off the first mortgage first. many times, like what happened during our last major recession, there wasn't enough money for those second lien lenders to actually get their money, to actually get paid back. So they literally lost it all. They lost everything. They did not get a dime. So you have to remember those equity loans are going to be at much higher interest rates. You're probably looking at something anywhere between 10 and 14% based on your credit score and the loan to value you're trying to pull it out. Obviously, the lower your credit score and the higher, more cash out of your house that you want, the higher that interest rate is going to go. But a home equity refinance, so if we're just doing one straight refinance on your home to pay off your old loan and get you a new loan, there is a possibility that you will be anywhere from the mid fives to the mid sixes, possibly high sixes. Guys, rates are changing. It depends on the day you call me to talk to me about your scenario and what it is that you're trying to do. Where will the interest rates be? But mid fives, let's call it mid fives to high sixes, depending on your credit score, how high you want to go in the loan to value, and how much cash you're taking out. What kind of property do you have? Are you a single family home? Are you a condominium? Are you a duplex? Are you a 3 or a 4 unit? What kind of property that you have? All these things factor into what is the interest rate that you will get when you do a first mortgage loan. It is no different on a home equity loan, a second mortgage to leave your first mortgage in place, but keep in mind that the interest rate will be significantly higher, significantly. So we are going to decide, how much do you owe on your first today? What is the interest rate that you have? What does that mean in terms of interest that you are paying? How much money are you looking for to take out? What would that interest rate be? And blending them together, what you owe on the first, what you owe on the second, the interest rate that you pay on your first set of money, and the interest rate you'll pay on the second set of money. What is the actual blended interest rate that you will pay? If that blended interest rate is about the same or more by doing it in 2 separate loans, you're probably better off doing it in one separate loan on a 30-year fixed with having one monthly payment to juggle. You're not having to make 2 payments to 2 different places. 2 different loans aren't getting sold to 2 different lenders as the market changes and as, financing changes. So definitely a first mortgage would be my absolute favorite. But if it doesn't make sense, my home equity loan would be my second option that I would say would be the best way to get the money out of your house that you are looking for. So with that, I'm going to give you guys our numbers so that you can call us and talk to us about you and your scenario. How much money do you need? What do you owe on your first? I'm going to give you guys some homework right now. Pick up the phone and call us, but you need to know this information before you do. What is the balance on your mortgage today? You can find that on your most recent mortgage statement or log into your lender online and see it in your portal. How much do you owe? What is your interest rate? How much is your monthly payment? Does your payment include taxes and insurance? If it does, get us the breakdown. Again, all on your mortgage portal or on your mortgage statement, but have that information in front of you. It definitely makes the conversation go much faster, and you're going to get to what you need a lot quicker to make the decision that's best for you. Then, how much money do you need? How much are you looking for? And have a budget in mind. What can I afford monthly for everything? For my mortgage, for a second mortgage, for my property taxes, my insurance. Have a budget. What is that number that you feel comfortable paying every month if you can get this dollar amount out that you're looking for? So that is your homework before you guys give us a call. But we do want you to call us. We want you to talk to us. We're answering the phones 24/7. When it's after hours, our call service answers. They will set you up with an appointment. You can talk with us directly. If you don't see an appointment that works for you, please go to the website. Go to mortgagemomradio.com. Click on the Contact Us button and it will send me, Debbie, an email directly. I'd be happy to get you set up for a call time that works best for you and your schedule. If you don't see it available, you can actually book your appointment right online through the website. There's an appointments button. You can click right on that. So again, it's mortgagemomradio.com. Call us. It's 844-935-3634. That's 844. We lend for you. That's WELEND and the number 4. With that, don't anybody go anywhere. I'm going to keep going because I can see we've got quite a few people online, quite a few people asking questions. So I am going to keep going with this YouTube episode. But if you're listening by radio or podcast and you guys want to be part of the conversation, you want to be part of the show, all you got to do is text the word mom to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. You will get one text message a week with a link to join in and interact with us. I hope everybody by radio and podcast is having a fantastic day. I hope this was information that you guys all love, and I will be back again next week. We'll talk to y'all real soon. Bye-bye. All right, so don't shut it off, Mikey. I had to shut it down for radio, so that will actually be the end of the radio episode, but I do want to keep answering the questions until we are done. So please, you guys, I'll stay on for as long as I need to. So, we've got eBay. Once again, I love it. The name, the screen name on YouTube is great. eBay is the way to freedom. I love that. Want to remind everybody too, please give me a thumbs up on the show if you guys are enjoying this. It really does help our algorithm with all of the different platforms. If you're watching by Facebook, please, do the thumbs up or the like or the follow, whatever it is that Facebook asks for. For YouTube, please give me that thumbs up. That really does help us out quite a bit. It does help when people search that they find Mortgage Mom Radio and they can watch our information. But the question that eBay says is, when I apply for the home equity loan, is it the same process as a refinance or is it easier? So it is actually the exact same process as a refinance. It is not any easier or more difficult. It is exactly the same. It is a full loan application, all of your income documentation. There is nothing that is harder or easier about it. So it's just a matter of what is going to be the best way financially for you to get the cash you need. Not which application process is going to be easier or faster. They're both going to require an appraisal. They're both going to require an underwriter's approval. They're both going to require that you sign loan documents at the end. So it's pretty much same amount of time, same process, same everything. It's just which one is financially better. Heather says, is there a way to figure out if it's better for me to refinance the full loan amount versus getting a line of credit? So I didn't actually read your question, but we did just talk about that in earlier in the show. And that is where I was giving you the blended rate, and which one is going to be the better option is going to truly be based on math. The math is going to make the decision for you, which one is the best for you to do. Heidi says, thank you. Great information. Heidi, you are very welcome. Thank you for always jumping on and being part of the show and part of our team. You are amazing. Kim says, thank you. Great information. We'll be giving a call soon. Kim, we would love to hear from you. That would be amazing. We are here to help you guys. Every single person that is out there, that is watching, that is listening, we are here to help you. And that is it. We're trying to bring you guys in education and information to help you make the best choices and the best decisions. And at the end of the day, we are doing loans for a living. The show is not what's making us the money, guys. Trust me, I have nothing coming in off of the show except expense. What's making us our living is that we're getting to do the loans for you guys that you need. But in order to do that, we want to educate you first. We want to show you that we are good at what we do, that we understand what is happening, and our sincerity in we are going to take care of you. You are, not just our client, but you are part of our family. You are part of the Mortgage Mom Radio family. And then Tom, you jumped on. He gives us a thumbs up. And as a matter of fact, I think Tom actually did a loan with us maybe last year. I'm like 99% sure. So anyway, Tom, I hope everything is well with you. I've got a pretty darn good memory, and I just about remember every single client that has come through our office, whether I actually work directly with you or you had no idea that I was there and behind the scenes. I am watching out for every single loan that comes through our door and making sure that things get handled. And if I need to jump in at any given point in time, I absolutely do that to make sure that everybody gets what they need. And so I want to say, Tom, you have at a minimum called us with questions, but I am 99.9% sure that we closed a loan for you. And I'm so happy to see your name and that you jumped on with us. So with that, I'm going to stop the show for for today. I will be back next week. If you guys have a certain topic, a question, anything at all that you guys would like to hear me talk about, please don't hesitate. Send me an email, Debbie@mortgagemomradio.com. It's DEBBIE, Debbie@mortgagemomradio.com. Go to the website, go to mortgagemomradio.com. There is a contact us button. Send me a message through there. I am the one that reads every single question, and I make sure that you guys get the answers that you need. Tom jumps on, says, Debbie, Heidi, and team are awesome. I've been in real estate since 03, and yes, I closed a loan last year. So see, I knew it. I was like 99% sure. I'm like, I know this is our Tom, pretty sure. We love that you said that, Tom. Thank you so much. We're looking forward to always being your team that helps you and the family that takes care of you. So we hope you guys have a fantastic week. We'll be back next week, and we look forward to talking to you all real soon. Have a good one. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.